About 11:35 on the Big Show clock. Here we go with the Big Show. Bob Quinn on the Big Show today. We're going to check in with Dwayne again coming up here in just a little bit. Being brought to you by the Iowa Ag Water Alliance. Clean water in Iowa starts here. You bet it does. And we are celebrating another Clean Water Wednesday today on the Big Show. We'll have a special guest coming up just about an hour from right now. Talk about some clean water projects. We're starting off this half hour, though, taking a look at the marketplace. Brian Hoops with us, Midwest Market Solutions, on the telephone line. Brian, we are giving back a little bit of our gains yesterday, but I wouldn't say we got a lot of market movement going on. Corn, December's down 0.75%. November beans down 1.5%. What seems to be the talk of the market today?
Yeah, fairly quiet, Bob, as far as move or news this morning really pushing anything. Of course, earlier this week, a lot of talk was all about the planting intentions report and the quarterly stocks numbers, and that proved to be a real yawner. That's one of the three biggest reports of the year, and the January report was pretty quiet. The March report, that's a big one, was very quiet. Just, little surprise, I think, as far as winter wheat acres being down, lowest since 2020, and corn acres being the largest since 2013. But really not unexpected. I think everyone kind of expected about 95 million acres, and so it was just a little bit more than that. Trade yesterday kind of shifted towards the EPA and the possible mandates that they have going forward and trying to increase biofuel diesel blending mandates. They almost want to double those mandates. We've seen such a big reaction in bean oil this week, futures this week as a result. It's dragging soybeans higher along with it, and it's up again today. Today's more about the Trump announcement this afternoon, the tariffs, and I think everybody is hoping for at least some sort of a resolution prior to the tariffs being enacted. And we started to see maybe one or two countries starting to give in a little bit here. Mexico said they will not impose tit-for-tat type tariffs. So maybe that's a supportive feature for the market, but an agreement with Mexico, an agreement with Canada would certainly be friendly, I think, for these markets, because we've dialed in some of this news already that these tariffs are going to be enacted.
Well, here's the deal. I'm looking at soybean oil here, Brian, because you piqued my interest. The largest percentage increase of any commodity out there is in soybean oil right now. May contract is at $48.19, so shade over 48 cents a pound. Now, that's not, contract highs by any means, but we are moving upward. And Brooke Rollins was here a couple of days ago, Secretary of Agriculture Rollins, and she was talking and mentioned the oil situation. She says, quoted her friends at the EPA, and the way she said it, I wasn't sure if she was, being sarcastic with us, or she does have some friends at the EPA. I don't know, but she says my friends at the EPA tell me that they're getting close to coming out with some RVO or volumes for production, and she said we need to take care of a problem with oil, bean oil, mainly, because we get competition from outside the U.S. for using another oil other than soybean oil in biodiesel. And so, again, she had made reference of that, and maybe there's something to it, because we are seeing, like you said, some strength in soybean oil today. So we'll keep our eye on that. We're seeing continued strength in the cattle market, so I want to switch gear and get over to livestock right now. I don't know that we have any cash market developed yet. It was so late developing last week, and no, we have nothing developed yet. There are some asking prices around $212 right now. Where do you think we're going to be on cash, cattle, and what's keeping this market strong?
Yeah, the cutout values have really responded positively over the last 2 weeks. A week ago, we saw cutouts move $6 to $7 higher. They were that much higher yesterday alone, and that comes despite increasing our kills by about 50,000 head last week. So that's a really positive sign that consumer demand is still there for this product, even at these higher price levels. And that demand, combined with really tight supplies of cattle, and the higher cutout values are giving us strength in the cash markets, propelling these futures markets higher. So we're stronger here going into the mid-session despite midday box beef being lower. Still looking at this cash trade coming in, probably going to be at least steady and maybe $1 to $2 better than a week ago. So the cash markets, I think, are going to stay very strong. Certainly we'll have pullbacks in the futures markets like we've seen. There'll be some times where maybe the packers cut their kills. They won't need cattle for a week or two, and that'll cause a pullback in the market. But overall, it looks like the demand is still strong. Supplies are going to be tight. And really, you look at the cattle and feed reports and the breakdown, that tightest number should occur in the second quarter, which we have just entered into for this year.
Well, if you look at that cattle on feed report as well, there's not a lot of incentive to build the cow herd up. So it looks like we could be seeing strength in cattle, I guess, for a while.
I would really suspect that we will see it for a long time here to come. I think, this isn't going to go away anytime soon. This is kind of the industry where we're at. We're not really rebuilding that herd. If we do see some evidence of that, it'll start to show up in some of our reports. But until then, I just don't think we're at a point where we're starting to rebuild this herd. We're not backing demand away significantly. Grilling season is just around the corner. So I think, we're looking at a good year for cattle and cattle producers.
Well, Dwayne and I are doing our part. We're trying to eat as much beef as we can.
I'm right there with you.
Yeah, we've got the grill out, and I think I may be the only one on the planet that's ever worn out a grill before something else falls off it. But we use the grill and love it, and we'll continue to do that. We put pork on the grill as well. There's no kidding about that out there. You mentioned tariffs, and I know we got a big deal coming up a little bit later on this afternoon. But right now, Wall Street is ahead a little bit. I'm not saying the market's on fire or anything, but it's up 155 points. And that's usually an indicator that maybe the general traders are breathing a little easier right now.
Yeah, we started the stock market sharply lower in the overnight trade in the morning.
We did.
Yeah, and so we're reversing higher. In fact, we made lows on Monday and kind of took out the previous lows from earlier this month. And ever since then, we've been reversing and moving higher. And so we traded lower early in the session, closing higher. That's a strong technical sign. So it looks like, maybe as far as the stock market goes, anticipating these tariffs are not going to be quite as bad a deal as what a lot of people want to think.
Hey, Brian, got to run real quick. What's your number? How can we find out more about Midwest Market Solutions?
Yeah, you can go online at MidwestMarketSolutions.com, find out a list of all of our offices and phone numbers there. And if you want to call me directly, the number's 417-501-5132. All
right, Brian, talk to you again in an hour and 10 minutes. Brian Hoops, Midwest Market Solutions. Time to get the events of the day.
Food, fuel, and fun. We speak farm. This is the Big Show.
We're speaking farm right now, wrapping up the program today with Brian Hoops, Midwest Market Solutions. On the telephone line with us, talking markets right now. Brian, we had a report out earlier this week that we thought might have some impact into the market. Did not have a lot, and in fact, we've got kind of another yawner of a trade day going right now, at least in the grains and soybean market. Oil has shot up, and you had some maybe at least thoughts on soybean oil leading the charge right now. What have you heard concerning soybean oil?
So, it's kind of been talked about in the last year or so, Bob, but the biofuel industry is probably looking at a major policy shift. The EPA is considering a significant increase in the biodiesel blending mandates. Currently, we're at about 3.35 billion gallons, but they want to push it all the way up to 5.5 to 5.75 billion gallons. So that's a big jump, and that would require a lot more use of blending these biofuels like E15 and B20. So you've seen bean oil, the markets are always anticipating, looking ahead to what could potentially happen, and bean oil has seen a big rally. Speculation has really ran rampant in that market, and we've seen a lot of short covering as a result. So it helped soybean market yesterday. doesn't seem to be helping too much today. We're kind of treading water, it seems, in corn and soybeans, waiting for the announcements with President Trump this afternoon about the tariffs and the situations. Now, we've already seen where Mexico's president has said they will not have retaliatory tariffs against the U.S. So if any country's probably going to make a deal first, it's probably going to be Mexico. They really need the U.S. as far as an origin of imports for their corn into their country. And they need the U.S. as a trading partner. So Mexico, I think, would be the first domino to fall. And if that happens, there's a good chance that Canada and some of these other countries would follow suit, with China probably being the last one to want to enter into an agreement. So the tariffs are looking to go into place, but there's always that last Hail Mary that could happen, that agreements are reached and their tariffs are not enacted. And that's kind of what I think the markets are waiting and seeing here at this point.
Well, what are we looking at here, Brian, next couple of weeks then? Let's speculate out, and you got about a minute and a half or so on corn and soybeans, December corn, November soybeans.
Yeah, I want to say that we're trying to reverse course here. We're going to rally. The last week of March or so is a really good seasonal time frame for producers who've made cash sales through the winter to buy those sales back and look for a summer weather rally. Seasonal lows are usually about that time frame, and then they rally into May, June, July, or summer highs. So let's look for hopefully some higher prices to come here in the next 30 days or so. Maybe we get some weather situations. Maybe it's too wet, too dry, whatever it is, to help us out. Southern Plains is going to get Delta region is really going to get dumped on right this weekend with 10 to 15 inches in parts of southern Indiana, Illinois, Missouri, and that Ohio River Valley area.
Well, weather has a way of taking over the marketplace. Hey, Brian, folks want to find out more about Midwest Market Solutions. How can they do that?
Yeah, we'd love to talk with any of your listeners. Our website address, again, is MidwestMarketSolutions.com. Direct number is 417-501-5132.